Hey, good afternoon, traders. Today is Friday, July 7th, approximately 12 p.m. Eastern Standard Time. And it has been a couple weeks since I have brought you a weekly update, mainly because I was out of the office all last week. So I want to quickly update you on the macro environment in the markets. And I think what I'm going to do is just do that and Bitcoin and separate all the other information regarding altcoins in another video. So without further ado, let's get started with what the dollar is looking like. Get my chart up here. Sorry about that. The hotkey was failing me. Anyways, this is the dollar, and it looks like we are right on track. You can see the arrows here, and I have this red circle as a target. That red circle is right on the neckline of a larger head and shoulders pattern, the neckline of which comes all the way from 1984. And should that break, or when that breaks, shall I say, it is bye-bye dollar. So this still is a valid pattern. I know we have a double shoulder here. That sometimes happens on head and shoulders patterns. As long as the second shoulder is lower than the peak of the first shoulder, then the head and shoulders pattern remains valid, and that is the case here. In fact, what this looks like is just a bear flag, and down we are headed towards that target, which I initially circled there. Okay, now over to the VIX chart. Does this data correlate? Yes, the dollar is headed down and the VIX is down. You can see we had a little triangle here, the breakout of which we've reached our target. And actually that 50-day moving average is providing resistance right now. And down we are going on the VIX. So as long as we remain within this range here, and the dollar continues to crash, the stock markets here in the U.S. should continue up. So let's just jump over to the SPY to see what that is telling us. And as soon as my markings load up, you can see that the SPY is in fact on its way up. However, several cautions here. First of all, you will see I have an orange triangle here. This is an ascending triangle. Let me just outline that very quickly so you can see where I'm talking. All right, so this is an ascending triangle. That is a bearish sign. Second thing I see here off the bat, and I haven't looked at this chart in 2 weeks, is the formation of a possible M pattern. That is also bearish and would take us down somewhere into this area if this M pattern plays out. So we have some opposing or contradictory indications in our charts here. The dollar looks like it's moving down. The VIX is down with that, which indicates market is up, and it is up at this point, but it could be we are forming a local top here and the dollar may pump again. I'm not saying that head and shoulders pattern that I showed you is absolutely going to play out. All right, this is just what my prediction was based upon probabilities, but the dollar, if the Fed hikes, could continue its strength, and this could actually turn into more of a bullish a pattern. All right, so then we have a larger more of a W pattern here. All right, you see what I'm talking about? So you would X this out, and you have sort of a double bottom pattern here, and that could get rid of this head and shoulders pattern if the dollar continues to get stronger. Now that seems to be what the SPY is indicating with multiple indicators, not only this ascending orange triangle, but the M pattern. And additionally, the VIX is at all-time lows, essentially. And it's hard to believe that it's actually down this low with the fact that in a geopolitical perspective, we are at the brink of nuclear war with Russia. And anytime that we are in this type of turmoil from a geopolitical perspective and on a macro basis, uh, there should be an element of collective fear. And that is not here. So we need to, that should raise a caution flag. All right. So all this I'm saying is we have indicative markings on our charts here between the dollar and the SPY. And the SPY has given a good run. So are we getting exhausted? I would say we're getting close. This RSI level here continues to rise. We're getting into, it has a ways to go, like our chart here indicates. Like this M pattern doesn't have to play out. We could come down here and continue moving up into this triangle, and that could take us all the way into September, really October, before we break down out of this triangle. So it doesn't have to be the case that you turn bearish immediately. All I'm saying is keep your eyes on these multiple indicators. Let's find out. It's looking interesting. Let's find out what we're going to do here over the course of the next few weeks and months. And it's always possible that these ascending triangles, which are bearish, sometimes we see a blow off top here before we come back down into the triangle and then drop further. So that is also a possibility, and we'll only know which direction we go once we have one of these major trend lines break. All right, so very important to keep monitoring the dollar, the VIX, and the SPY, NASDAQ, or DJI, whichever one you're using to track the markets, and you could be tracking all three. And of course, never take your eyes off of the US 10-year, the US 2-year, because they tell you what is happening. In fact, let's just take a look at the US 2-year real quickly. You can see multiple first of all, this descending channel, which was bullish. Yes, we broke to the upside, and then we hit our level of resistance and came back down at 5% and came down hard and fast. And now we are also forming an ascending triangle on the US 2-year. Again, this is a bearish sign for the US 2-year, which would indicate that more immediately the dollar will continue to fall. And again, if the dollar continues to fall along with the VIX, it's positive for the markets. Now, because the VIX is at all-time lows, what could be happening here is the variation or the combination that we could see in the future is the dollar continues to decline and the stock markets decline, which would mean at some point in the future the VIX is going to spike hard. Because what happens when the VIX spikes hard and the dollar is coming down? You have an equilibrium. So if the VIX spikes harder than the dollar declines, that's where we have the fall in our market, which would correlate with what I am seeing on the SPY. So that is a possible formulation of price action on the dollar, VIX, and the SPY. We just have to continue to monitor this in order to understand what's going to happen here. Okay, now on over to our Bitcoin chart, which is very noisy, but let me clean this up a bit real quick. And so in my drawings, I have hidden everything except I think what's important at the moment. First of all, we have this particular trend line coming from January of 2021. This level up here comes from January of 21. All right. And you can see this candle is confirming this is the range which we have been in. And it's indicating that we will remain in this range. All right. So we made it above this resistance area here, major resistance. And I've stated that as soon as we get above that, that is a bullish sign for Bitcoin. And that is why I've gone in pretty heavy into Bitcoin out of my portfolio, more than normal. Usually I cap out at 20% per trade. In this case, I'm in Bitcoin 30% right now. And actually, if we continue downwards for whatever reason, I will just hold it. Bitcoin is going to be a winner in the future, especially with Larry Fink and BlackRock. In terms of financial, I'm saying that's a good thing from a financial perspective. I'm not saying anything else about Fink and BlackRock in Bitcoin. I know many purists do not like the fact that BlackRock is now involved in Bitcoin from a privacy perspective, probably most, because many feel that the block explorers that exist and have existed for quite some time, especially with Bitcoin, will become a means for the government to track you in the crypto world. So not only will we have CBDC, but Bitcoin, which was meant to maintain anonymity in transactions, will be tracked from a wallet perspective, and that those tracking mechanisms will only get better and better with the advent of BlackRock in correlation with governmental entities tracking your purchasing capabilities. Anywho, that is the argument against BlackRock and Larry Fink. And the positive is you have corporate money entering the scene. This can only be bullish for the long run. And you can see, as long as we maintain this range here, this is all accumulation, and we're kind of building our base here to go, in my opinion, obviously higher. So now I've zoomed out to the weekly chart, and I want to show you a couple things that I've outlined in past videos. First of all, this M pattern looks to have played out. We've come to our downside target right here, and now we are continuing upward. Second thing I want to point out is this 200-week moving average. All right. So first of all, we made history with the longest bear market ever. So those of you who have made it this far, congratulations. And you can see this is indicated by weeks of price action underneath this 200-week moving average on Bitcoin. This has never happened to this extent before in the history of Bitcoin. And now that we're back above that 200-week moving average, that is a very bullish and very positive sign. So where does that 200-week moving average sit? Currently at $26,824.50. All right. So if I were you and I was going long on Bitcoin, as I am doing, I would make sure that my stops are somewhere below $26,824. In fact, I have my stops set at $26,000 to be exact. I believe that's what I'm at. Let me double check that. Yep. So here is my spreadsheet, and you can see I have my stops set at 26,000. And by the way, guys, as long as I've got this spreadsheet up here, let's just go through some things, because I know one of my users wanted me to give how to go through this spreadsheet, which I've done before in the past. Actually, skip that. I've just decided I'll make a separate video on that and not waste any more time here. Okay, so one more thing I wanted to show you on this Bitcoin analysis. I brought up all my markings again. Don't let all of this confuse you. Here we are up here, and here are our two lines of support, the top of this major resistance area and this descending trend line. Remember, that's from December of 2021. Should we get down in this area, I start to become concerned because in a larger perspective, we have this cup and handle pattern. And currently we have broken the neckline of the cup and handle pattern, which is also bullish, and we have remained in price action that has remained above that neckline, which is bullish. So zooming back in, that neckline is also this area right here. So if we were to break below this area and enter back into the orange or anywhere below, I would say we're coming right to this huge area of confluence. This area right here aligns with what we saw on the weekly chart, the 200-week moving average. Remember, that was at $26,825. So we could wick down right to this area and still be safe with my stop out set at $26,000. But that would invalidate that very bullish cup and handle pattern I just showed you on the weekly. Anyways, guys, that is my analysis for this week. Again, Bitcoin overall bottom line is we have mixed signals between the dollar, the VIX, and the stock market that we definitely need to keep our eyes on. Over on the Bitcoin side, everything is looking still bullish. All right, we're in this range, and until we get into that orange area or below again, do I start to get less optimistic. Right now, I'm very optimistic. Bitcoin is holding its support, and we have lots of bullish signs happening, mainly that large cup and handle pattern, which is telling us that Bitcoin's about ready to go for a ride. All right, so hopefully that helps, and I will have a few more videos probably this weekend regarding the altcoin space, and I'll go over that spreadsheet that I'm keeping as well as my drops tab portfolio. We'll talk about those things if you're interested in those videos. Until the next video, guys, peace, y'all.